Hello, everyone. This is Sebastian McMahon from IA Financial Group, and I'm back with another edition of the Weekly Economic Review, this time for the week ending August 12, 2022. So I'm live from a very ugly hotel room on the road here, but still, I'll be here with you to talk about the latest figures on US inflation and why maybe the peak is in and what to expect for the print that we'll have for Canada next week. So very concise review here. Let's look at the markets on the week. So positive returns on equities. So the stock market continues its bear market rally. We saw strong gains from the TSX, about 2%. If we look at the S&P 500, 1.5% on the week. It was pretty good, but the Canadian dollar was very strong this week too. The price of oil rebounded. Risk appetite coming back on also helps the Canadian dollar versus the US dollar. It's the US dollar that fell versus multiple currencies. So the jump in the Canadian dollar means that shaved a good bit of the return on the S&P 500. So that there's very strong outperformance of the TSX when everything is brought in Canadian dollars this week. Risk on means also often that you have interest rates rising. So yeah, that's what happened this week. Higher interest rates mean negative week for bonds, and the price of gold pretty much going nowhere again in this environment. So might the U.S. inflation rate have peaked in June? So that's the question that everyone is asking. It's possible. We were at 9.1% in June. Now it's 8.5% in July. So again, it's the inflation rate that might have peaked, not the level of prices. So we're far from crying victory that this recessionary bout is over. The level of prices are still rising at 8.5%. That's still a lot. And before we get back to the central bank targets of somewhere between 1 and 3%, because this is what's going on here. Central banks are working very hard to bring the inflation rate down all the way to between 1 and 3%. Probably that leads us to late 2023, early 2024. So it's far from a victory. But maybe now central banks can remove their finger from the panic button and stop hiking by 75 basis points a clip like they did over the last two meetings from the Fed, or 100 basis points a clip like we just had from the Bank of Canada. So maybe that removes this part of the equation, but make no mistake, central banks are still going to be hiking rates aggressively until the end of the year. Well, there was some Fed speakers that still hinted that they would love to see the leading rate at 4% at the end of this year. We're at 2.5% now, and it's August, so there's many big hikes coming, but maybe it won't be still bigger and bigger hikes, so maybe less panic. So this is what the market is taking as a big breath of fresh air. So next week we'll see if Canada the pattern follows, because if you see here in the chart the components of inflation that inflation is still pretty widespread. All of the components are contributing, but the lighter shade of blue component, this is the transport component. This is the one that shrunk a little bit on the month. So you have in transportation, you have the price of gasoline. We have a peak for now, at least in early June for gasoline, and since then it's been moving lower, and it moved even lower in August. So there's good news maybe for the next sprint, but there's also the new vehicles and used vehicles components that are in there. So this is where you're starting to see some normalizing of inflation. So there's good news, but all of the other components again are contributing a lot, and there are still some components that are still accelerating. And that brings us to what central banks will be focusing on over the next quarters, not just months, but quarters. The inflation in services. So the inflation in goods might have peaked, but in services, this is where labor scarcity and wage prices, wage inflation are having the most impact. So the prices from services are most impacted by the rise in wages. So this is where we're still seeing some acceleration. This is where there are some risks on a central bank that makes inflation a bit stickier. So maybe that puts a floor on the inflation. So we'll see how it turns out over the next few quarters. But this is going to be what central banks are looking at. Are we seeing too hot a labor market? That means that inflation is going to be stickier, and they'll have to, go even deeper into their rate hikes. We'll see. So this is going to be the focus over the coming quarters. So what to watch next week? We'll have the Canadian CPI print, and we'll have a retail sales in the US, also the retail sales figure, and the minutes from the last meeting from the Fed from July 27th. So that wraps it up for the week. ia.ca is your go-to webpage. You can follow me on social media, on Twitter, on LinkedIn, Economy and Finance 101. There's new material posted every single month. And you have the podcast, of course, in your interest. So there's new material being published on a very regular basis. And we are just about to enter studio to record another batch of episodes. So stay tuned. Apple, Google, Spotify, podcasts, all of those platforms. You can follow us there. Podcast is in your interest. So that wraps it up for the week. Always a pleasure to serve you, and I'll be back again next week with another edition of the Weekly Economic Review.